Ladies and gentlemen, good day and welcome to the Kamat Hotels Limited India Q2 and H1 FY25 earnings conference call hosted by Valorum Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, ma'am.
Good evening, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Kamat Hotels India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the second quarter and first half of financial year 2025. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Vishal Vittal Kamat, Executive Director, Mrs. Smita Nanda, Chief Financial Officer, and Mr. Nikhil Singh, Company Secretary and Compliance Officer. Without any further delay, I request Mr. Vishal Kamat to start with his opening remarks. Thank you, and over to you, sir.
Thank you very much. Namaskar, everyone. Great to have you all here with us. We've had a good quarter, is what all I could see. We have already published the comprehensive presentation on the stock exchange for all to see, along with the results. One of the main things, as earlier was seen because of the elections and the heat, but the next quarter was somewhat better. And now the best part is that Q3, Q4 is our more stronger, industry-wise, it is the more stronger quarters to come. So we are seeing good traction in that regard in the coming for the wedding season and also the various corporate events, conferences. So we are looking positive on that. We have already been extensively, and the work will almost end in the month of November. The work will end for our Goa hotel. Our Lotus Resort, which was a very nice 30-year-old property of ours, has been completely revamped, and it will launch in, like I said, the 1st of December. So that is our current target, which we are as on track. That will become a Orchid Hotel Goa, the Pasaros basically, where it's a themed based on a carnival of birds. So it's got a very nice, very beautiful theme. So that is there. And along with that, we also have our upgradation happening in the Orchid Pune, where certain areas we have taken up to expand because of the banquet demand. So there are certain things, and all these expenses have been done through internal accrual. We have not looked at borrowing, in line with the company's thinking that every year we should take up 2 properties which we will upgrade, so that like we did last year with Era by Orchid in Nashik, when it was a 1800 to 2200 ADR hotel. Today it is sitting at around 3250 to 4500. So that kind of upside is also there, and guests expect better. So we are able to match that expectation in terms of our brand. So with that, I look forward to addressing you all, and look forward to all your questions. Thank you. Namaskar.
Namaskar. Thank you, sir. And good evening, everyone. Let me brief on the key performance highlights for the quarter ended 30th September 2024. The consolidated revenue for the second quarter was 85 crores compared to last year 64 crores due to FY24, marking an increase of 33.4%. Year-on-year basis. The EBITDA for Q2 FY25 was 23 crores, up from 19 crores in Q2 FY24, reflecting the growth of 20.3% year-on-year basis, with EBITDA margins reported at 26.2% 17.35%. The profit after tax Q2 FY25 stood at 8 crore rupees, a significant increase from rupees 30 lakhs in Q2 FY22. For the first half of financial year 2025, the consolidated revenue stood at 159 crores, representing the growth of 19% year-on-year basis. The EBITDA stood at rupees 36 crores, which declined by 14% year-on-year basis, with EBITDA margin reported 22.5%. The profit after tax was INR 9.4 crores, which is substantially higher than the corresponding period of the previous year. With this, I conclude my remark and request the moderator to open the floor for a question.
Thank you.
Thank you.
We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all participants that you may press star and 1 to ask a question. The first question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question and congrats for an improvement in numbers. Sir, I wanted to understand, as in even second half is stronger and this time also there are much higher weddings compared to last year. And given our is a high fixed cost kind of business, so given the improvement we are seeing, what kind of margins can we get in second half?
So basically the margins will more or less remain the same because there are certain costs which have gone up, which we are looking at reducing. One is basically our electrical expenses have gone up. The other one being labor and manpower. So overall, there has been an increase in the cost of labor. So the margins would be more or less the same depending on hotel to hotel. It fluctuates with anywhere between 28% to 45% of the GOP. So with the season coming in fact, certain months we sometimes find it going even higher. But on an YTD basis, you can take that generally 35%, 32 to 38%, depending on hotel to hotel, would be the GOP, what we call as gross operating profit, which is basically your expenses, your income minus the expenses. So it's not exactly, you can say EBITDA, but it's not exactly EBITDA.
So that would be like gross margins.
Yes, gross margins, correct.
Including employee expense.
Yes, including employee expense, all expenses.
Got it, sir. Got it. And sir, on interest.
Please go ahead.
No, please go ahead, sir.
I was just saying, in fact, we also hold all other expenses also, such as even lease and all. In those properties, it comes down further. It comes down to maybe around 15% to 18% in terms of margins.
Got it, sir. And sir, on interest expense, as in I can see that we have reduced the high cost debt and refinanced it. So what kind of, as in we are seeing that there's a good reduction in interest expenses. So what is our color for the second half as well as the next year, sir?
So generally, sir, we give one participant one question, but I'll just complete this since you already asked, so that it's fair to everyone, and then when you can come back also. But since you asked, let me share with you that we currently are at an interest rate of around 10.75. Okay, 10.5. I'm sorry, it was 7.5. It has come down to 10.5. We currently are at a debt level of 120. So we currently are at a debt level of 120. Our interest is at 10.5. And as we had already given the expectation that we should be this year, we will be net neutral, whereby our EBITDA plus cash in hand will be equal to or higher than the debt.
Got it, sir. Thank you and all the best.
Thank you, sir.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Stuti Shah, who is an individual investor. Please go ahead.
Hi. Thank you so much for the opportunity. So my first question was on the average ARR. So what were our average ARRs for the Q2 and for FY25?
Thank you, madam. Basically, we've had different ARRs in different hotels. You can say around 6,750 has been broadly in Orchid, Mumbai. Around 6,000 has been in Era, Mumbai. Okay, our Fort Jadavgarh has been at around 8,000. Okay, same way in our Lotus resorts in Konark, it's around 5,000. So different hotels, as you can see, is different ARR. Okay, so it's very market subjective, and these are basically for the Q1, Q2 type scenario. In Q3, Q4, it will obviously go much higher. So we expect it to have a good growth.
So what are our targets for FY25?
Sorry, targets for ARR?
What are our targeted ARR for FY25?
So this is very difficult to give a targeted ARR, madam, because ARR is a function of the market. So while we would ideally want anywhere between what would be practically the 7 to 10% growth on a YTD basis, because you'd want to beat inflation and you want to beat expenses. But the truth is that it is a very market-driven function. So we have to basically see a game between the yield and the rates. So when it's like example during Christmas, New Year, it shoots up and it becomes much higher. But then subsequently the days before might be lesser. Like right now in Diwali, while our business hotels are unfortunately a little down, but the domestic tourist areas such as our Lotus Murud and Konark and all these other leisure destinations are booming. So ARR, there's no target for an ARR. We have a target for a revenue, and based on that we work on, because that is more important, that we earn the revenues and the ARRs are a function of that.
Got it. And lastly, I had a question. What were our average occupancy rates for Q2?
May I request you to please come back, because, like I said, it would be not fair. Let's take everybody, because otherwise it becomes a little challenging. I'll wait for you to answer your question, or if someone else again asks this question, then you will get answered, madam.
Okay, thanks a lot, sir, and wish you a happy Diwali.
Madam, to you too. Thank you very much. I really appreciate. Happy Diwali to all the listeners and participants.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Shreyansh from RM Securities. Please go ahead.
Hello. Hi, Vishal. I had one question. So, in the previous con calls, we had given a guidance of 400 crore for FY25, and I think I saw in your recent presentation that you have reduced it to 350 crore. Regarding margins also, I think we spoke about that margins will remain stable, but again, they have come down from 30% to 18% in Q1 and 26% in Q2. So, I just want your thoughts on this, like how did we come up so short of the numbers that we were expecting, and what is our outlook going forward?
Okay, sir, 18% का है नेताजी first quarter में?
Quarter 30th June.
क्या है ये last year का second quarter?
Yeah, this is last year.
हाँ, so first quarter में 18 था ना? Yeah. So sir, you're right that we have revised our thing. We expected a couple of our hotels to open, which did not open. One being the Orchid Dehradun and the other one being the Orchid Chandigarh. Both being fairly large and very good revenue generators with good EBITDA margins. The Orchid Chandigarh is a 126-room hotel that has got delayed. That should be opening before the end of this financial year. So we will get its full benefit next year. So whatever we give the projections and guidance, we expect that those guidance and projections to come with that, and particularly Dehradun, because Dehradun also is a large hotel with almost 100 rooms with very good banqueting and a prime location. So we expected that, but unfortunately that has also got delayed due to various reasons in the Dehradun city. So because of particularly these two, we have got delayed, and that's why we have revised the overall target. So next year, whatever we said this year, we will continue that, and that will be achieved next year for sure.
What about the margins, though? Like, they reduced, considerably in Q1 and Q2, right? From what was the EBITDA margin for you?
Right. So let me share with you. One of the anomalies with our reporting is basically that there is a 10 crore EBITDA reduced because of the lease now that comes. So one is that if you compare this to, in fact, this issue will not come in the Q3 and Q4 because when we had taken on lease ERA Mumbai, that time the rental started from October last year. So this will be the first full financial year that is got completed, and that is why what you see in H1 and in H1, you see that 10 crore reduction in EBITDA directly is because of that. So if you add that back and few other things, then basically it is still not as good as what we expect. We expected it to do better, but still to just give you an apple-to-apple comparison, within this H1, if you add 10 crore back, which is the lease rental, which earlier was forming part of the EBITDA, but was in the expenses as an interest. So this is basically one major difference which once you correct when you add back rather, that time you will see that it becomes a more apple-to-apple comparison. So that's why you find the margin coming down considerably because 10 crore is a large amount.
Yeah, sorry, just one small question. So you had said this, I understand, I had read this also, but this was there in Q4 FY24 also, and the margins for Q4 FY24 and let's say Q2 FY25 are similar. But the Q1 is a big anomaly that the margins have reduced so much in Q1. So how do we look at it? And should we expect a quarter like this going forward? As an investor, what should we expect?
So, sir, Q1 definitely, sir. Q1 was not a good quarter for us and the industry in general, especially particularly us because we are Mumbai-based. The elections and the heat, both at that time affected us drastically, F&B business and our elections both. So, elections, luckily for us in this time, Maharashtra is a single-phase election, so it won't affect us as a state so much. But earlier, because we were having so many phases, the elections drew out too long and it affected overall the movement of hospitality movement of corporate and other things. Either there's an election in their state or there was an election in Maharashtra. And because it was in so divided phases, it created that. So definitely I agree with you that Q1 in general should have been a better quarter, but because of various reasons, which was mainly extreme heat and elections, this was a challenge. This does affects us.
Was this reduction due to reduction in ARR or was this due to occupancy?
Because of occupancy, especially. ARR held stable, but occupancy, because of, like I said, people coming lesser. So ARR did not drop, but occupancy did drop, sir.
Okay. I have a couple more questions, but I'll come back in the queue. Thank you.
I really appreciate that. Thank you, sir. Thank you.
Thank you. Next question is from the line of Shakshi Chabra from Swan Investments. Please go ahead.
Yeah, hi, sir. So my question was largely on your F&B cost. So your revenue quarter on quarter, if I see, has increased almost 16%, but the F&B cost has increased only around 3%. So can you just explain what was the reason behind that?
So one of the reasons, madam, it's a very good question actually, that why the F&B has not, because mainly we have found a growth in our room business. The ARR, like I mentioned, improved, and because of that, you find a revenue growth in the room segment, not only in the F&B. F&B has been considerably lesser. Also, we have got better rates for our F&B. Our rates in banquets and others have improved, but the food cost, when we look at the particular consumption of food and beverage, the food cost has not gone up too much, but the rates have got better. So that's how basically we've been able to keep this. But the flip side of that is that in giving a better product and in giving a better experience, your labor cost goes up. You have more refined people, you have more staffing. So that's why you find that these food costs have not gone up a lot, but the employee expenses have gone up. Plus also new hotel openings and other things also. So we have other things. So this will actually pan out. The high employee cost which is there, comparative high employee cost will pan out because many of the properties are opening. Now the ERA by Orchid Noida will open in November. on 7th of November we are opening. So that also will start. So unfortunately for 5 months, this got the staff and other things. Normally we take not more than 3 months to open, but due to various reasons at local level, this also got delayed by 2 to 3 months. So that was an extra expense. That also will do that is a very good location. It's in Sector 62, right opposite Google, Cognizant, and all these various IT. So we have already a very good demand for it. One of the very few branded hotels are there. Radisson is there. Now Era by Orchid will be there. Otherwise, it's market is very small. There's a very big vacuum there. So we are looking forward to this thing. So these kind of things will start panning out. Chandigarh has got delayed, so we have a team working with our owners on the Chandigarh hotel. That also will start panning out. And these will all get, smoothened. So this also is the cost which basically is going to come down mainly by increasing our revenues and opening more hotels.
Okay, right. All right. Thank you so much. All the best.
Thank you, madam. Thank you. Happy Diwali.
Happy Diwali.
Thank you. The next question is from the line of Mahesh, who is an individual investor. Please go ahead.
Yeah, congratulations on a good set of numbers, and thank you for the opportunity. So, can you give updates on the new properties that you were talking about in Noida, Bhavnagar, Dehradun, and Chandigarh?
Yes, sir. So, even Bhavnagar, again, very well, I missed out Bhavnagar. Bhavnagar actually should have been ready, but again, because of the fire that happened in Rajkot, the government asked the owners to make many changes. So, that's why, because again, it's a leased property. So, we are only able to do as much as what our owners can. So, our owners are very good people. They own a lot of malls and other things in Gujarat. So, diligently they have been, so that got delayed. So, Bhavnagar should have been on by now. Chandigarh, like I mentioned to you, Dehradun. Now, Noida is opening. Hyderabad will also take another few months more, it will take. Gwalior is a new hotel we have signed up. Actually, we have not informed. When we sign up, we inform, normally?
No.
Stock exchange? No, we don't. Only on opening. Okay. So Gwalior is a beautiful hotel right near the palace. It is an Orchid hotel which will open by December 25 is what we as of now seeing the track. So these are all the new hotels which are opening. Then we also have in Puri our property which is there. It's already Mahadadi Palace, but along with Mahadadi Palace there will be a tower which is coming next to it, which will be a 156 room tower of rooms, because Puri is a fantastic wedding destination. Lord Jagannath Ji is there, and our property has a unique position of being very close to the temple with a temple view. So that's how basically we have these properties which are in the upcoming.
Okay. So I follow-up to this question. So how will you finance these projects? Are they on outright basis or lease on a management contract?
Each and every one of these, sir, are either in a lease or a revenue share. So there is not much financing required. In fact, as I mentioned before, the company from internal accrual has been upgrading its own hotels. We have not required to borrow any money, and whatever surplus cash is generated, it is being parked to be utilized in the future. So because our target is basically to, like I said, be net zero by this year, which easily we are going to achieve that target. I don't think we should be more than 110 crore in terms of debt, with maybe cash reserves in the 20-25 range, and apart from that our EBITDA also around 90. And although our target would be to beat that, but right now it looks like 90 is our target.
Got it. Thank you for the opportunity.
Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Farhan Tariq from Parallax. Please go ahead.
Hi. Thank you for the opportunity. So I have a more of a qualitative question. Do we have in our strategy as Kamat 3.0 something which is differentiating us from the competitors? Because I see a trend similarly as 10 years ago that a lot of our competitors are expanding, and then we may have our let's say capacities in the hotel industry. So do we have? Are we just depending on the boom, the economic boom, or do we have something differentiating us from the competitors?
That's a very nice, interesting question. Before I answer that question, I'd like to please correct myself. my CFO has given me good news that, no, Mr. Kamat, you are telling 90. It should be around 100 that you must please give the feedback, because we will be achieving a GOP of, EBIT of approximately 100. So around 100. Okay. So I correct myself there. So then we are definitely crossing our target of being beyond the net positive, even without the cash in hands. Smita? Thank you very much. Thank you for the Diwali correction. Coming now to this very nice marketing question. It's a little long question. I will try and keep it as brief as possible. First and foremostly, sir, what differentiates us that we are Asia's first 5-star environmentally sensitive hotel? Kamat has the double edge of being one, not just having a ethos in terms of environmental hospitality, but also known for our food. So wherever you find, the Orchid Pune, Orchid Mumbai, Hira Hotels, Ayodhya, Hira Orchid, by the way, is doing exceedingly well, whereby the food is 50%, sometimes going up to even 65% of the daily sale, depending on the day-to-day and the thing. So where food is such a strong part, because after a point, you will see a beautiful room, you will see a beautiful view, you will see everything shiny, but after the 15 minutes to 1 hour of glamour, when you go with your family, you are going to basically judge, or your family is going to judge the vacation based on how happy they were, and that is food. So food is one of our main strengths, which we have demonstrated time and again, whether it is in Nasik Hira or in Ayodhya Hira or in Orchid also. So food, one. And secondly, like I said, our environmental sensitive hospitality allows us to connect with a lot of other corporates who are very much keen. And we, in fact, get a advantage that when we, considering our ecotel assertion and other things. So this is basically what also differentiates us in our standing. So definitely this connect which we have helps. Thank you, sir.
Okay, thank you. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Shreyansh from RM Securities. Please go ahead.
Hi. So my next question would be, what is our growth outlook, and what are the growth drivers that we're looking at in the next couple of years? Like, how should we look at Kamat going forward?
Sorry to interrupt, sir. The management line has been disconnected. Please hold.
Okay.
The management line has been reconnected. Over to you, sir.
Hello. Hi. So my next question would be, what is our growth outlook for the next couple of years, and what are the growth drivers that we're looking at? Like, how should we look at Kamat going forwards? Because I think this year has been a little bit disappointing from our standards. So, what should we expect?
I understand your disappointment, sir. I am with you. We always expect more from ourselves. In the coming time, basically, our main focus is to grow steady. We are not in a hurry to just sign up hotels. I know that some of our peers have been signing up and gone into excellent number games, but they have not gone into excellent quality in terms of revenue or in terms of the guest satisfaction, which basically hospitality is a long-term game. We cannot just sign up for the sake of it and then lose out on our customer loyalty and customer. By the way, you would be happy to know, or other, at least I can say about, we have 37% of our customer base is from repeat customers. 37% of Kamat Hotel's revenue comes from repeat customers. And this is all based on mobile numbers. We have our Orchid Reward program where members put their things. So I'm very happy to tell you that that's very high. And we're talking about people who have come minimum twice. So you can imagine the kind of loyalty we have. And this is only after having a comparatively very small footprint as we have of only 14 properties. So as our property scale goes up, as these new properties come, I expect that this percentage to only enhance. So our going forward, what is it? We are taking properties on lease more. There are many more announcements, or maybe not announcements because we don't announce, but like Gwalior has been signed up. A few more properties are there which will be signed up. So they will come in the presentations, but the main focus is to take robust properties either on lease or on this thing. Management is in our frame, but it is not the main this thing, because like in management there are a lot of challenges which come. To get a like-minded owner who will be equally sincere to want to focus on your brand and his asset, that kind of marriage happens very difficult. Most of them are only interested in taking your brand and then not interested in the qualitative aspect of it. So we do find these challenges because and it's a industry thing. So when we know these challenges, we'd rather take properties where if there is an issue, it's resolvable. When guests come, they are happy. So we will keep growing, and we have a growth plan which is basically to grow in a robust fashion and in a listing fashion, in a sure-footed way. The main thing is what we are very concerned about is not doing a rapid expansion just to sign up anything and then get hit by issue in the next, say, year and a half or 2 years, because all good things will come to an equilibrium. Like we saw in Corona, after the 2020-21 was the worst. Then 21-22 was the boom. Then 22-23 was the super boom. Now 23-24 has been a decline. Foreign markets have opened up. Today it's cheaper to go for a foreign holiday than to go to premium destinations in India. It is also now visa on arrival, free visa, various other incentives lured by various tourism boards, because India is, by the way, the world's second largest outbound industry after China. It used to be number one, China. I don't know if India has overtaken that, because China hasn't been outbounding much after Corona. So we are one of the largest, most lucrative markets. People have already been seeing India in and out, so there would be a fatigue. There is a fatigue. In fact, this season for some of the places where people have gone in throngs, those places may have faced a challenge, though I cannot. I can say with assumption based on my friendship and hearsay, but figures will only come out subsequently. Luckily for us, we are in those kind of markets like Konark and Puri, and which are kind of evergreen markets, Ayodhya. So I was recently interviewed on one of the channels, and I said that politics has not stopped anyone's astha. It's not that Ayodhya will do well because of any political reason. It will continue to do well for God knows how long as God decides, because people are going there in throngs, and they will continue to go in throngs regardless of what. Now it's a wave, ek leher hai jo ruk nahi sakta. So we have a couple of more properties we are signing up over there. At the right time, we will inform you about it also, because our current hotel is doing exceedingly well. And like I said, our food focus is there. We don't want to take our F&B for granted. We are definitely food focused. And there are certain other opportunities which will allow us to scale up really well and really fast, because of which we are creating this entire cash flow war chest. We have we basically have, from the learnings of our past, we know that our real growth will come by being prudent right now and making sure that we can take advantage when the time comes. There are opportunities even now also. Everything is not as hunky-dory as you would see in some of the FMCG and others. What I was hearing one very nice interview on TV where the personal vehicles have a little slowed down, but premium bikes have also slowed down to regular bikes. So you can find that there is that YOLO, what people thought, you only live once kind of scenario, that has now fading out back into a more realistic sense of life. So where the over-premiumization will go into qualitative premiumization. And that's what our also target is. We aren't aspiring to be in that ultra bracket, because we are here, we are a hardcore Indian company. And Indian companies always, we know that our market is in the premium, but in the rational premium market. So we are keeping that segment in mind and doing it. I hope, sir, that answers your question. And I'm sure that in the coming years, we will make you definitely more happy being part of us.
Just one small follow-up question. So you said that this, obviously the leisure travel domestically has come down. So do you have any plans to open hotels in Tier 1 cities so that you can take more advantage of those corporate travel things like that?
So, sir, we are doing a mixed bag. Let me again reiterate that I said that those destinations which are over-traveled, okay? So, you would find that some of the places where you've gone with your family once, you might go 2 times, but third time like, chalna hai, udhar chhod yaar, aur kidhar jate hain. So, there are those kind of destinations opening up which earlier would not be, so popular. It's like, as a person from Mumbai, will like, Mahabaleshwar jaane ka hai, nahi yaar, aur kya hai? So then you find some new destination which is offbeat but within a driving range of 3 hours, 4 hours, 5 hours, because you still want to go for holiday. That has not changed. The nature of holidaying, taking a family, going for short excursion is a habit here to stay. But probably, would you go to the same venue or same destination or same kind of thing? That is where the thing is. So, it's not fair for me to name any city because, again, I would not be responsible about that. But broadly, I can tell you that over-popular tourist destinations are seeing some kind of case-to-case basis resistance.
And do you have more hotels in the pipeline, or do you plan to open more hotels in Tier 1 cities? Like you have a couple, but I think obviously there is always scope for more.
Yes, sir, there is, and we are opening Noida on the 7th of November. If any of our callers are there, I would be very happy. My father also would be there. So if anyone is from that zone, you would be more than welcome to be a part of us. From 7th to the 10th, we are there. So if anyone would like to come, they'd be happy to be our guest with their family for lunch or dinner. That is opening. We are looking at some more hotels opportunity in the Greater Noida and the other belt also. So there is a focus on Tier 1. The challenge with the Tier 1 right now is basically that, again, while we're getting properties for rentals, some of the rentals are still absurd, where in the downturn I know that I will not be able to sustain. So I'd rather not take it today. I want to be prudent with our growth, and I think that's doing us well. Thank you, sir.
Thank you.
Thank you.
Thank you. The next question is from the line of Raj Saraf from Finvestors. Please go ahead.
Sir, am I audible?
Yes, sir.
Yeah. Sir, sorry, I joined the conference call late, so excuse me if I am being repetitive. Sir, we have already incurred 19 odd crores rupees in finance cost. So what could be the interest expense going forward in the next 6 months? And the tax percentage, sir, what we are accruing the tax percentage, sir?
Yeah. Sir, it's okay if you are late because I really appreciate Diwali time hai aur fir bhi aap join kiye, so I appreciate that, so don't worry about it. Sir, going forward, we basically will have approximately 12 CR of interest. For the next 6 months.
And tax percentage, sir? What is the tax percentage we are recurring?
Sir, the interest rate is 10.5. And the outstanding loan of our Axis Bank is 120 CR. So 120 का इसमें का 12 करोड़ कैसे होगा? Next 6 months का 12 करोड़ कैसे होगा? 120 CR है और 10% ना, so around 7 crore. Not 12.
7 crore for the entire 6 months.
7 crore is for the next 6 months, sir. Yes, sir.
Next 6 months. And so the tax percentage, sir. Tax percentage we want to know.
10.5, sir.
Sir, tax percentage.
Oh, sorry. I'm so sorry. I'm sorry. I only think of interest. As a borrower, मेरा तो यही होता है कि कैसे interest चुनाओ. Madam, आप ही बताओ.
So related to tax, tax is till this quarter we were having a 0. Next quarter and the second quarter means for third and fourth quarter we will be having a 1.5 crore, and after that also almost 1.5 crore most probably. But tax liability payable is this much, but liability the paid should not be there because we have a CDSA client like 26A should be there. So maybe most probably 2 crore rupees will get it a refund.
Okay, so net tax outgo will be, ma'am, how much?
Net tax would be coming say 2.5 to 3 in between 3.
2.5 to 3 crore, and the finance cost would be close to 7 crore.
6 to 7 crore. Between 6 to 7 crore.
Yeah, okay. Thank you, ma'am. Thank you.
Thank you.
Thank you. The next question is from the line of Sahil Karia from White Pine Investment Managers. Please go ahead.
Hello, sir. Thank you for the opportunity. Could you please give us the ARR numbers for Orchid Mumbai and Era Mumbai properties for FY24 and also the occupancy rates?
So as I mentioned, for Orchid, basically around 6,500 to 6,000. Around, you can say broadly, sir, around 7,000 for Orchid Mumbai and 6,000 for Era Mumbai. Okay. And this is occupancy was for the H1 was both 74%.
Okay, sir. Thank you. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Dhruv Agarwal, who is an individual investor. Please go ahead.
Hope so I'm audible. Thank you. Thank you for giving the opportunity and congratulations on a very good set of numbers, sir. So firstly, I have a question on this upcoming properties. What kind of revenue potential do you see from these properties, sir?
You want to know what is the expected revenues from both these properties?
No. So my question is, sir, the upcoming properties that we are planning in Noida, Chandigarh, Hyderabad, Bhavnagar. From all these properties, what kind of potential revenue do you expect to come in, sir?
So broadly, sir, basically what the thing is that we expect that we would be doing from Chandigarh, we expect to do around 30 CR. Okay. Even from Dehradun, we expect to do around 30 CR. Okay. Because they are, like I said, large banqueting based hotels. And that's why we were to look at crossing our target of 400 as we had earlier mentioned. Apart from that, we also have these other hotels, Bhavnagar, which has got delayed. But once Bhavnagar comes, that should also do around 10 CR. Okay. Again, that actually what will happen. And Noida, basically, we expect also to do around 10 CR. Okay. We have because right now Noida is only 40 odd rooms starting. The balance will start a little later. So that's how basically we did our projection thoughts of 400 crore. At that time, Hyderabad was not there. Hyderabad should do around 8 CR, but Hyderabad was not there. Gwalior was not there. Gwalior has just recently been signed. Gwalior also should be doing around 20 CR. Okay. Puris will take time. So that's it.
Okay. Okay, fine. And sir, on the debt side, you have currently around 105 crores of debt. So, are there any plans to become debt neutral in 1 to 2 years? Is there any guidance of that?
Sir, I already answered this question that we are at 120 right now. We will be doing 100 crore of EBITDA and we will be already having cash in hand of around 20-25 CR. So, by this March 31st, we will already be zero, sir. Where our loan will be, at March 31st of this year, financial year ending, we will be at a debt level of 110 CR with a EBITDA of 100 CR and a cash in hand of 25 CR, 20 to 25 CR. So already, sir, your question I have answered. Maybe you have not heard before. So we will be basically already more than net for the positive. Net zero.
Okay, so by this year end, we would be debt neutral, sir, according to you.
More than net neutral. Deficit. No,
okay.
Surplus.
Okay, fine. And sir, what kind of percentage growth one should expect in the ARRs and the revenue?
I'm sorry, sir, I could not hear you. There was something in the middle.
Yeah. Okay. So I was saying, what percentage of growth one should expect in H2 in average room rate, sir? As H2 comparatively is better than H1.
We cannot predict, sir, room rates, but but we can say that always the ratio is at 40-60, when H2 is 60-ish approximately of H1. So room rates I will not be able to predict, but revenue-wise, that is normally the case. Thank you, sir.
So I was just wanted to understand, sir, on the average room rate, what currently we have around 6,700 of average room rate. So one should expect around 5 to 10% growth in average room rate.
At least 10 to 15% is the minimum.
Okay. And sir, the last one question. Seeing the demand...
Sir, there are other callers.
Sure.
Thank you.
Sure, sir. Okay, yes.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Farhan Tariq from Firelex. Please go ahead.
Yeah, hi Vishal. You mentioned that we have a repeat customer base of 37% as loyal customer. I was just wondering if, on a face basis, it sounds really good. I was just wondering if we also have a benchmark, like the industry, what's happening with the competitors about what do they have?
Sir, we don't have a benchmark of the industry because I don't know how many people actually, apart from a certain set of branded hotels companies, actually have the kind of infrastructure in place to measure it. I don't know, sir. Unfortunately, I have no benchmarks. Ours is entirely based and linked on the mobile number, that when you as an Orchid Reward member come and you quote your mobile number, that time it is linked and tagged to your account and you get points, rewards, discounts, upgrades for your stay, just like any good loyalty program would be there. Now, because ours is a integrated program and except for two hotels, all are part of the Kamat group, that's why we are able to enforce very nicely our program, because it does have a cost. In other hotel companies, whether the owners don't do, does become a challenge. So this becomes an issue in any managed hotel because owners may or may not want to participate in your program, and there's short-sightedness way they will not see the value of repeat sometimes because they don't unfortunately when the times are good, that time they don't want to spend, and when times are bad, that time you don't spend. You have to be consistent. We are very consistent in our spending money on social media interaction, WhatsApp marketing, all these kind of things which are there. So I have no benchmark, but I can say, sir, that it's a figure which we are targeting to take it higher.
Okay, got it. My second question was about the plot on the NH8, I believe it was, out on the Mumbai-Ahmedabad highway. Do we have any update or any timeline of what we are doing with the plot?
Sir, currently we have no update to provide at this moment because there have been some developments like the Vadhavan port and other things which are in that area. So that area is, we are getting some more details about that. One of the largest ports of India is not very far from our property of the highway, which actually not India, it will be one of the largest in Asia. So, and the major cargo terminal which Modi ji had inaugurated. So we were doing some line of length and then we took a pause on it because we said that it's better for us to take a stock of exactly what is happening based on Vadhavan. So we'll be able to take even more advantage of that. While Palghar and that area, Manohar Palghar, is a very upmarket area, upbeat area in terms of the real estate and housing. But we thought we'd just be a little patient on it and do the needful.
Okay, understood. That sounds good. Thank you so much. Happy Diwali.
Thank you, sir. To you too.
Thank you. The next question is from the line of Sakshi Chabra from Swan Investments. Please go ahead.
Yes, sir. I just wanted to understand, you mentioned that you're expecting 100 crores of EBITDA in this year. So in H1, you've delivered around 36 crores. So are you expecting that you will achieve 64 crores of EBITDA in H2?
Around, yes, madam. If I go by my same 60-40 ratio, which I just mentioned in how H2, H1 is, then this would be around, say, anywhere between 95 to 100.
So you're also expecting then the margins to be close to 30%?
Yes, madam.
Okay. All right. Thank you.
I appreciate you coming back. Thank you.
Thank you. The next question is from the line of Shreyansh from RM Securities. Please go ahead.
Sir, this would be the last question from my side. You had recently announced the merger of your two of your landholding subsidiaries with Kamat, and some equity allotment was done. So could you just explain what was the purpose of that merger? Because I think garbage disposal plant was there, I think, in one of the holdings, and another was a parcel of land, right? So
yes, sir. So basically, this was a merger of two of the companies, and basically this has land asset also. This has the property just now mentioned, which is 16 acres on the Gujarat highway. This also has a property of land which is abutting to the Orchid Hotel, which is also part of the thing, which has a sewage treatment plant on it. And this was actually something which has been actually in our books also noted from 2012. The balance sheet में कब से है? 2012-13 now. More than it. But regardless, it was from a long time. And right now, sir, as we have been doing various things, we've been cleaning up, making all the things neat and clean, cleaning up the balance sheet. So this was there. And that's how basically this merger was proposed and done. So it will take effect once we get our, where is it now? In process? NCLT. SEBI. So once it gets SEBI approval, then it will go into NCLT and the matter will get consummated. Then of course it will come to the members for approval and it will finish, hopefully conclude, so that we can then do other things.
What are our plans for the land? So we will getting a decent chunk of land, right?
So on 18 acres, sir, we plan to develop along with a reputed developer. We plan to develop that 18 acres into a mix of residential and hospitality. It's a highway touch. It's also touching the Nadi, the Vaitarna Nadi, and it's a NA land. It is the only NA land on that belt. So it has a very good prime visibility, prime value, and it can be developed because it's NA. So it's not that we have to wait for any conversion or anything. So we, again, it's on the way to Palghar and the Vadhavan port, which I just mentioned. So we feel that it has an excellent long-term output, which it will give us a good mixed-use opportunity.
Why not sell the land? Like, why? You think you'll fetch more value when you develop it? Is that so?
No, I will not develop it, sir. I will join with someone and develop it with that person. If I wanted to sell it, I could have sold it before only. But I think that kind of land for us to again get, and that also one parcel of 18 acres, as today you know how township developments and how people wanted that would be next to impossible for us to get such a large piece of land on the highway side. Inside interior you wouldn't get, but this is right bang on the highway. It is, there used to be a Kamat restaurant there also long back, but in the Corona we closed it, and then we did not restart it post-Corona. But that is basically where the land is, 18 acres of riverfront. So it's very prime location. Today, even if we go to sell it, we should get comfortably anywhere between 3.5 to 4.5 CR for it. That is its value, even if we sell it today. And if the need be, we can sell it. But what will we do with the cash? I mean, it is better that for us to see a long-term horizon with a hospitality play and additional, which will, be more beneficial than one-time selling it. This is my thought, sir. As of now, our thoughts can always change based on the need. If tomorrow we find some great hospitality opportunity and we decide that, we need this thing, then we can always look at it. So, that way.
Okay.
Our main objective right now, looking forward, is basically to just accumulate cash like a spirit. We want to basically, sir, do our growth from internal accruals. We want to basically grow by lease and by asset, keeping our debt light. Okay, so we will again every year will be this loan will be paid off in 3 years, even if we don't do anything, and yet we will have huge cash reserves because we don't want to unnecessarily splurge and buy anything. We be prudent and see. So we are being patient, sir, because we've come out with great difficulty. Kamat Hotels has bounced with great difficulty in 2021 thanks to our various partners. And, we are always grateful to all our bankers who supported us in those 10 years of, ARC. After that, our finance investors who came in, Alpha, True North and SBI. In fact, Alpha and SBI are still with us as our shareholders. So we don't want to do anything in a hurry just because, we are sitting with this thing. And we will get a lot of good assets and a lot of good groups to take over, and we are patient for that. We are playing the long game, sir.
Okay, sir. Thank you.
Thank you, sir. Thank you very much. I think we can conclude this meeting because there's no more questions of anybody. So, sir, moderator Ji, can you please do the needful?
Thank you. On behalf of Kamat Hotels Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.